Hello, everyone. Welcome back to the TraderLion channel. This is Richard and Ross. And today we're going to be going through TASR, one of the greatest stocks in history, advancing more than 1,300% from the first proper buy point off this high tide flag right here. So as for fundamentals, we can scroll down here, Ross, for just a second. We all know the product, the TASR stun gun. This was selling off the charts, as you can see from the earnings. Right before the stock goes on this huge uptrend from 0.7 up to 64.5 split adjusted, we see the earnings come in, earnings growth 200%, 200% again, 900%, 1800%, and finally 700% before the end of this move. So fantastic earnings, sales strong as well. And yeah, that's pretty much the fundamental story. It had a new and revolutionary product. And then we saw that kind of that earnings growth come in and really drive the stock to the moon. So Ross, I'll hand it over to you and we can talk through this weekly chart and then go over to MarketSmith and talk about the final climax top.
All right, now taking a look at TASR's weekly chart in front of us, the one thing I would point out is I believe we would tend to get an earlier start on this one back here. Reason being, and let's move back a little to the left in the pattern. Notice here as the stock, plummets to lows over these couple of weeks, the accompanying volume dries up relative to the red or down volume as it dropped along the way. After that, notice the stock tightens up along its lows, and then we start to see, and actually even here before it tightens up, you might even say, look, we're starting to pick up some weeks of accumulation here and here. The stock gets tighter, volume is super dry, and then all of a sudden we're besides these little black weeks here, which represent up weeks of volume, we're starting to see clear accumulation here as TASR makes its way up the right side. And I point this out because that sort of tight action and volume, that even though we're near the lows of a base, that's letting you know something's going on. It's all at that same time, and we'll scroll down just a tad here so you can see earnings at that same point we're turning from negative to huge positive, and typically by that point you're going to see the estimates pick up. So when you're seeing this sort of volume come in after the tight action, a huge triple digit quarter of earnings, a compelling story, I would imagine you're seeing estimates revised upward, that sort of thing. It's already on your radar at that point. So by here, after you've seen all of this, all of the volume that came in, pushing it up the right side, you're seeing almost no selling in there. Red weeks or the down weeks are coming on lighter and below average volume. So by the time you see the stock tighten up here in that flag-like formation, let's not get into the semantics, and sure, it may not be within 15% of the high, but you've got enough going on here that if you draw, the alert line, let's call it, that red line there, and we'll point to it, that breakout on volume clearly be bought. And that'll bring us, and if you look, and I mean, this happened to be the case from the time TASR put in its bottom, this 10-week line, or otherwise its 50-day moving average, holds this stock on a closing basis all the way until it finally breaks down. It never closes below until the stock reverses, rolls over, and breaks. That first close below was the end. So anyway, keeping that in mind, that's the beauty of finding a big institutional quality liquid name with a real story and earnings behind it. In many cases, you'll 9 times, 8 times out of 10, 8.5 times out of 10. This seems to be the case where you'll get a stock that respects at least its 50-day moving average, and some of the stronger ones will hold, their 21-day or 23 exponentials throughout the majority of the run, and not even begin to touch and have to worry about respecting a 50-day moving average until later in third and fourth stage breakouts. So Ross, please go ahead, please.
Yeah, and I just want to mention, for those of you who've read the Lifecycle trade, you can see it has a nice kind of IPO advanced phase here. While the market is kind of coming off an intermediate low, it has a nice bounce here. Then it completely falls apart as the market sells off once again. And then we see constructive action. Ross talked about the tight action right here, right before the fall through day on 3/17 of 03. And then once the market really turns around and we start another uptrend, that's when everything comes together, the fundamentals, the earnings, the price action, and this thing just takes off. So yeah, it's always important to keep in mind the kind of life cycle the stock is in. And then finally, when we see that first kind of proper buy point that O'Neill points out, this one's a little bit earlier, but this one right here is right after the stock breaks its all-time high. So don't feel like you've missed a stock just because it's already made a huge run like this, doubling off the lows. Once it sets up constructively again, price tightens, volume decreases. We see big accumulation weeks and small distribution weeks. Don't feel like you've missed a stock. If it sets up again, it's a first early stage base. Go ahead and give it a shot if it's got that potential. So yeah, I thought I'd just add those key facts here, as well as look at throughout this move. And this is something Ray's really ingrained in me. You see the average volume here, this line right here, the black line, steadily increase through the move, and just basically indicating that there's more and more institutional interest. There's more trading going on. And that's a hallmark that we see in many model book stocks and true market leaders during their huge uptrend. So I thought those were just key points to point out as well.
That's a big one. And while you're talking about the life cycle trade, if I'm not mistaken, there's a super compelling, super important. What's the number that 90? Isn't it something 93% give or take that of IPOs are going to undercut?
I believe so.
Well,
yeah.
I mean, the IPO low, I guess, right? So you undercut here and go, but ultimately, so the fact that you're tightening up down here, and I say this because Bill would often look to the left. We'd go through stocks after what happened, would you buy, or where. So he was constantly looking to the left, whether it be an IPO or any stock, to see if there were any key areas to the left that were undercut, for potential shakeout. So where you see that constructive action below in the retake, that's a big deal. And, it also gives you, that number from the life cycle trades giving you confidence that now you're well below that area where, now you've got things in your favor. You're no longer waiting for that, potential. Are we going to undercut that low? Right. So.
For sure. And we talked about the IPO base during the Google video, which will be linked down below and should be popping up right now here. So go ahead and check that out after this one. But definitely Taser had the potential for a nice trade here. You can see a declining trend line here. And then the volume come in after that bottom, that U-shaped turn. And then it has a nice run from about $1 split adjusted to about 3.4. So not too bad if you catch a piece of that. As it kind of moves through this IPO base low, and we do get a retest here. So not the easiest trade, but definitely something that you could have taken advantage of. And then the real move doesn't start until we break out of the institutional due diligence phase, which is this first longer term primary base. And then we have the huge run towards the climax stop. So yeah, it's definitely a recommended book, The Lifecycle Trade by Kathy Donnelly and crew. So go ahead and check that out if you haven't yet. But yeah, so interesting how you can kind of characterize all these different super winners going back in history.
Absolutely. Absolutely. And you just get that classic, on the early point, you got that classic big volume, tight on light volume, the volume comes in. So you've got edge and the risk reward really working for you. You've probably got another quarter of earnings or so behind you, and
right.
A legit story at this point. You got, and obviously by the time you're looking at all of this volume pumping into it, and maybe 2 or 3 quarters of triple digit earnings and some big estimates, it should really wake you up. And it's worth pointing out, even if you wait till that proper breakout through highs here out of this flag pattern, this is still a 1,300% move in 30 weeks.
Not too bad.
We just like to, not at all. We just like to talk about this, absolutely not necessary, but that's a very viable, constructive spot to begin this position. I would point out here too, look, this is one of your biggest winners at this time. It has the earnings, everything along. Now notice, it's harder to see here on the weekly because it tends to clean things up, but you'll see here on this breakout, the breakout fails, undercut, there's some serious, shaking that goes on after this breakout here before it finally goes. And I mean, even here after it looks like you tighten up and go again, you're back here testing its 50-day moving average, and that same area again. So while that looks all nice and easy on this weekly chart, you know, when you've got your hard-earned money working for you and that's whipping around like that, and you're waiting for it to work, it's not that easy. Also, you know, so however, the bottom line is if you're on top of these and you're buying them correctly and you're managing risk along the way, in 9 times out of 10, you're not going to get shaken out as long as you are not, you know, chasing these things past where your risk reward, you know, sell stops and whatnot, what have you. Remember, getting shaken out of a stock is normal. It's not the end of the world at all. Most of the time there's a way back in. So anyway, well, let's just, maybe we can take a look at that on the daily when we go there. So even from here, you're looking at an enormous move. But again, even on one of your biggest winners over a short amount of time, you're looking at a little work finally getting in on this breakout and waiting for it to work. So again, that's, you know, another Ray thing that I think he does really well at putting in everyone's head is you've got it, as long as it's not doing anything wrong, you've really got to let your stops work for you. Anytime, I'll tell you, anytime I get impatient and try and put, you know, work my way out of something ahead of my rules, I wind up sorry. And this reminds me of one of those cases where, you know, it's going to take a few weeks of patience and really sticking to your discipline. And it's right. So, and then you get one of these explosive moves higher, you know, and yes, these do become somewhat, it looks like more of a quote unquote lockout rally, right? You get these straight up weeks. On a daily chart, there's probably areas, my guess is a stock like this typically will respect a 10-day or a 8-day or a 5-day or something like that. So, and don't kid yourself, if for some reason Bill ever thought, or let's say I was a PM talking to Bill and he felt I was in the second best leaders, because let's say I missed the first best, he will work it, you know, he will force feed his way. He's going to manage risk along the way. It may not be with, you know, within the textbooks, but if he really has a belief that, hey, here's a big leader and it has, you know, you're going to wind up forcing you. However, that's the situation you don't want to get yourself into. I'm never a fan of having to force myself into something off the 10-day and hoping I'm, you know, got the momentum just right and there's enough behind me to keep me in until some moving averages catch up and my stops become more logical instead of just protecting me in the middle of nowhere land because I feel like I really need to be in this leader and I've missed it kind of thing. So again, you know, this nice tight short consolidation, another one that's ultimately what a bull flag pattern is, whether you want to call this a flag or a pennant or what have you. Ultimately, you're getting 3 weeks tight here. Notice we're way too early out of your, you know, base breakout here for this to be any, even though it's straight up. And, you know, let's say if we look back, I'm not sure one of these could be our widest weekly move, and there may be, you know, the characteristics of a climax in there,
but it's too early. Basically,
yeah, a climax move has to be at the dead end of a rally. It has to be something that's gone and then gone again kind of thing. So as a rule, I believe, if I'm not mistaken, in the book, you've got to be at least 18 weeks from that, you know, this breakout. And here we're just not there yet. So, and this is the kind of, so again, we don't even touch its 50-day moving average, and it continues to do this, tighten up for a few weeks, volume tapers off, as we can see, as the stock tightens up. Volume, you know, when the volume comes in again, it's clearly upside volume. You've got the big breakout and the same sort of action all the way up. Now, you know, at this point, it's, you know, the stock's screaming at you, hey, we can use the 50-day move. The 50-day moving average means something here. So by this point, we're watching its 50-day moving average for a break, you know. So keeping that in mind, a break of that line on a closing basis is going to be let's get out, depending on how aggressive you want to play and where you've already bought the stock, so on and so forth. A stock like this then also becomes addable on that 10-day line. Every time, of course, until you start to get way up there, you know, you're at a later stage, and now we actually do start to get that climax action. And it becomes very clear here, this red week off the top that reverses, closes on lows, shakes. I mean, that is clearly your ugliest week of the entire run. It's your widest, clearly your widest week. after a huge straight up move. What, now, like we discussed before, from this point, you're about 1,300% to its high. And if we go down to here, we'll point out, and we don't see a whole lot of this lately, but splits excessive in number and share count are typically happen as a stock top. So you're getting all of that. This is your climax, your classic climax top right there. Right. And again, even if you didn't sell proactively into the climax, the close below the 50-day, at that point on a stock like this, I'm not waiting for a second close below. I'm going to sell at least half my position, or the rest of what I didn't sell if I didn't puke any in there after that. Even if you didn't sell proactively, I'm going to tell at this point, when you see that week, you forget outside week, it's outside almost, is that, I can't tell on this chart, but it
almost
looks like
2 weeks,
almost 3 weeks, right?
Yeah.
It almost reverses the entire thing. So at that point, I mean, if you really wanted to do it, you could wait for an intra week, intraday, whatever day it broke below that low. But that is a clear get me out, Charlie, right there for a stock that, holds its 50-day throughout the length of its run.
For sure. And even if, just to add, even if you bought it during this kind of second stage base, that's still around 12. You've easily got a double, triple even. So not a bad move in just a few short weeks.
So for sure, even Richard makes a great point. Even if you were super late to the party and started buying that thing in the low teens and got out anywhere between 40 and 60, how can you complain about that? It's a huge move in just a matter of a few weeks. So
for sure. So we covered a bunch of topics here, the life cycle trade analysis of this, as well as high tide flags, and then managing your position along the way using the 10 weeks. So now let's go over to the daily in MarketSmith and talk about that last climax top and how to basically identify that when it's actually happening and going on, and how to manage your risk.
So here we are looking at Taser on the daily MarketSmith chart back around when it put in its climax top. Just wanted to point out really quickly, you'll see here Axon Enterprise Inc. Taser has changed its name to Axon Enterprise. So that's why we're looking at AXON and not TASR. In any event, this is the final move from Taser right here. We get a breakout and run. And what I want to point out, where actually on the weekly chart, it may be a little easy. It's actually much easier to
identify the climax.
Yeah, to spot the climax on the weekly chart, especially if you're already looking for it. At this point, you're definitely no longer too close to the breakout. You're well out of the base. The timing is perfect. Now we're looking for, the characteristics. Now the characteristics on a daily basis, where you're seeing the exhaustion gaps and straight up run for, let's say, 5, 6, maybe 8, 9 days. You're not getting that here. You continue to get what looks like fairly constructive action until one day we just gap down and fall apart. This action right here, the gap down and close, is telling you something's wrong.
Right.
At a bare minimum, you've got to at least sell some of your position. Let's say you're super stubborn and you believe in whatever it is, and you want to give Taser at least till its 50-day. So as we looked at on the weekly, that the 50-day moving average, this red line is the equivalent of its 10-week moving average. The first close below there after a 1,300% move, where it never closes below there, especially when you're seeing this sort of volume accompany, a slam, a body slam of that nature. By the time you're closing below its 50-day, there's no need to wait for it to undercut or close below a second day. That's the stock forcing you out of your position. And you can always do the math. And remember, you can't see here, 449 looked late on the daily chart, right? That almost looked late. So from there to almost $64, 1,300%. I'll tell you, one of the funniest things I've ever heard Bill say, the guy who I used to share my office with before Mike Webster as a portfolio manager was in institutional services with me. And his cubicle was right across from mine. And Bill was coming out of Gill's office one day and walking by, and he called Bill over to look at a stock and said, "Hey, Bill, do you think this stock," asked him, did he think a stock was finished? Did it climb? Whatever it was. And he just looked at it and said, "Well, It's already gone from, whatever it was to whatever it was. It was nowhere near a 13. Maybe it was an 8, 6, 7, 800% move, followed by what the hell else do you want from the thing? So that's always a good check too. 1,300% in 30 weeks. I mean, 800% in a year, 9 months, 10 months. That's an enormous move. So that in and of, sometimes you just have to do a basic check like you were mentioning before, and then I'll be quiet. Ray is very, very spot on with watching that. If you're watching your weekly average volume just move up steadily like that, and you're seeing the, weeks of accumulation hammer above, like we were looking at on the weekly chart, that's just a very big picture, simple, obvious thing, but it tells you, it's a very powerful indication that you're on the right track. So
for sure. I guess we'll leave it there. That's a great place to stop. I hope you guys enjoyed the video. If you did, go ahead and leave a like down below and subscribe if you're new to the TraderLion channel. And we'll see you guys in future videos.